Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert and Lanny, your favorite dividend investors here on YouTube, bringing you guys dividend stock analyses, purchases, increases, and news almost on a daily basis here, 4 videos a week. You can't get enough of the dividend broskies over here. We're going to talk about a consumer goods stock today, one that doesn't get featured by most, because this is a time to start padding the consumer goods section of your portfolio, bring in a little safety and a brand or brands that you've heard of. That's what we're going to dive into today.
All right, let's do this. Smash that subscribe button. Give this video a big old-fashioned thumbs up. Guys, help us get to 18, 19, and 20,000 subscribers. It's time for
Man,
this thing to explode. It's time to
come
blow.
on, guys,
Help us.
subscribe. It's
Help us
very
out,
easy. It
please.
takes 2 seconds. Click it. You clicked it. We're good. Let's roll, guys. Thanks for
Yes,
supporting us here on this channel. I mean, Bert, this is a stock that you don't own.
I do not. Do you own this one?
We do in my wife's account. We own this consumer goods, stock in my wife's account. And according to their statistics and their research, they're in 95% of households
Yeah,
in
oh,
the
I'm sure.
areas that they serve.
I'm sure I would challenge everybody here. Go look in your kitchen. You're gonna find something. There is something from this company in your kitchen. I can almost guarantee it.
When I was writing up the work for this video, I was like, gosh dang it, it's true. That's what I'll say.
Yeah, because look, there are brands that you can buy that are your store brands, but for some reason the products that this company sells are just superior to the store brands. You can get the cheaper option, but when you get there, when you use their products, you know it and you can tell.
Oh, it's true. Oh, it's dang true, guys. We're talking about Reynolds Consumer American. Ticker symbol is REYN, and you might know them full well by your Reynolds wrap. Your aluminum foil in particular is, I think, the main one, right?
Yes, absolutely. The
Yeah,
Reynolds.
that's what I have in our little
Yeah.
lazy Susan thing is the Reynolds aluminum foil wrap.
Yep, and that's the thing. I always mess around with the Target brand, the Aldi brand, and I know it's not the same. It's cheaper, but it's never the same. And that's one of the things. They also have Hefty too. Is that correct, Lanny? So they have the strong garbage.
Garbage bags, yeah.
And again, this is the one where you have the price point where you can tell when it's not a hefty garbage bag. I buy the cheaper ones. I'll buy the Target brand, the Aldi brand ones. They always rip. Hefty, I never seem to have that issue with when we get our hands on one of those. It's just one of those weird products.
And they also have different brands that you might see, such as Diamond and Presto. And then they serve, obviously, the Canadian market and have, pretty much the top spot there with the Alkin brand, ALCN. So just want to throw that out there. A very popular brand. So after this video, definitely look in your cupboards and say, what brand do I use? And, kind of nod your head if you're also in the same boat.
Please let us know there. So that's what's cool about it. We always talk about the power of companies with strong brands and how they become some great dividend stocks over the companies. And that's why we're always going to look at them. We're always going to flock and say, is this one worth it? I think that's going to be the fun part when we run them through our screener, when we hone in on some of those dividend metrics here. So let's talk about their last earnings release. So they released earnings at the beginning of August, and it was interesting. So let's talk with revenue. Revenue was almost $1 billion. It was at 940 million. It was up for the quarter. It was up 3%. Net income was up 27% compared to the prior year. There, it was 66 million. Operating cash flow for the first 6 months of the year, 207 million versus 101 million in the previous year. Doesn't take a rocket scientist to figure out that that's over a 100% increase there. They doubled that up. So strong numbers there from the top line and the bottom line.
Yeah, I think they had a good quarter. I
Yeah,
wouldn't expect those same quarters every
no,
quarter from this kind of nuts and bolts, right? Consumer company. They also did a pretty kind of what do you call it, diligent move and just said, hey, we're gonna voluntarily pay an extra 100 million towards their debt. Hey,
nice. Yeah.
go ahead, please.
Look, That's a huge thing right now, and so many companies are monitoring their cash expenditures out. So you have a
Companies are begging me for money right now.
yeah, yeah, they're like, let me get that private offering here from our shareholders. Give us more of that cash right now. So look, when you crush it, when your cash flow is up over 100 million from the previous year, sure, paying another 100 million towards the debt isn't a great use of that cash.
And again, they've only been public for a few years, going on a full 4 years almost. They went IPO in January of 2020, so almost hitting that 4 year mark. So pretty young. And I think the owner, according to some articles I read, I think owns still over 70% of the company. So if you guys want to confirm that, definitely let us know in the comments below. Which, by the way, now that you're still on this video, do you guys own some product? Let us know in the comments here.
Is the
But
owner
we're
named,
gonna,
I wonder, is the owner named Reynolds?
yeah, probably.
I don't know. I'm curious.
But they've their balance sheet's pretty clean, pretty liquid, pretty fluid, which you really need in this high interest rate economy, as well as they must be doing okay on the balance sheet if they're able to just voluntarily pay an extra 100 million towards debt. But their current ratio, which is current assets over current liabilities, is over 2.4 times, which is well above our one that we like to see. Then the quick ratio is actually at 1.14 times,
Mhm.
which is well over the zero point 0.5 to zero point 0.8 that we usually like to at least see. And that's
Great.
just good balance sheet.
Yeah, I mean, you said it. I have nothing really more to add. They voluntarily take care of paying down their debt, so they're clearly managing the strength of their balance sheet. It's fantastic. So let's run them through our stock screener here. Let's run them through the three metrics: the PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that dividend yield. Lanny, kick us off here with that price to earnings ratio for that Reynolds wrap.
You got it. Well, their stock is trading at $25.86. They've been a pretty poor performer since going public.
But that balance sheet's great.
Obviously it's a slim margin based business here. Year to date, they're down almost 14% and down 5% since last year. Earning projections, though, are $1.37 for 2023. 2024 is a lot higher, but I was like, let's be like, I always try to get the super conservative approach here. P ratio is just below 19 at 18.88.
Beautiful. That dividend is 92 cents. That gives you a payout ratio of 67%. So it's a hair above our 60% threshold, but not to the point where we're concerned about that. Not concerned where they're going to start cutting the costs and, reducing the quality of that aluminum foil. It's top-notch stuff there for the Reynolds wrap.
Let's talk about dividend growth. They've only increased their dividend one time since going public. Well, technically twice, but I don't count really the first one. Just because they went from 15 to 22 cents, and that was to me like, I'm Dikembe Mutombo in that one out there.
All right, so let's just game this out here and why that might not be as big of a deal as you thought. When did they IPO, you said?
January of 2020.
So what happened? And what happened shortly thereafter the IPO?
COVID,
Oh,
COVID.
yeah. So they faced a lot of headwinds, and clearly management's focusing on paying down debt versus increasing their dividend. So sure, while they don't have the robust dividend history, they don't have the 4 years dividend increase history for being 4 years public. I would argue that they're using the cash flow to manage their balance sheet in a better way to set up future dividend sustainability and dividend growth, despite the lack of the dividend history. That's just my quick take on it.
They had one real increase during COVID in 2021. I won't talk about the 15 to 22, but they did go from 22 to 23 in
Okay.
2021.
All right. All right.
That was so then I'm like, I'm gonna discount the first one, and then we'll say that they've done it once in the last 2 years. They haven't increased it. They didn't do it in 22, didn't do it in 23 yet. But maybe after this year, after getting through this inflationary time period, they might resume dividend growth. So, guys watching, this stock hasn't shown the history of growing dividends yet, but balance sheet management has been nice to see.
Yeah, so let's talk about that yield. Their yield is 3.56%. So without the growth, you're at least getting rewarded with a pretty solid dividend, well above the S&P 500.
Yeah, for a consumer branded stock where they compete with, your Proctors, your Clorox, your
Kenvue.
Kimberly Clark,
No, no.
which
I
ones?
said your Kenvues, not Johnson and Johnson. Your
Oh,
Kenvues.
yeah, yeah. Well, I didn't say J&J, I said Procter and Gamble.
No, I know. I was just messing with you.
Oh, yeah, 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 yeah.
I was just being an a-hole on that one. Sorry,
But
I
but
derailed.
they don't have a 5-year dividend yield average yet for obvious reasons, but they're probably yielding more than they ever have right now. I will say that. So that's Reynolds, guys. Again, a below 19 price to earnings, 67% payout. No real track record yet of growing the dividend, but a 3.5% dividend yield.
So, are you buying? What are you doing here, Lanny?
You know, it's not a bad company. It's kind of, we don't even have a large position. I'm not adding to it. If I find a better thing that suits it with the yield, I don't know if I'd replace Reynolds, but hey, if you really want a consumer based stock for, owning something that you use, again, Labor Day just happened. So I'm sure you guys cooked out, used aluminum foil, put it on the grill or wrapped stuff up, took it to someone's house, got that plastic wrap out or whatever the heck you call it. The
Yeah,
hefty, throw all your stuff away in the hefty bag. I mean, they're not going anywhere. Consumers will buy them. You'll see the big pickup during the holidays.
yeah.
I mean, it's a cash flow, you know, company that will pay you three and
Yeah,
a half to probably 4.5%.
one that manages its balance sheet very well. That seems to be the big recurring theme here for Reynolds that we keep coming back to. They manage their balance sheet and take care of business.
So I would say I'll keep it on the watch list. Um, really want to see what they do. Probably again, this is gonna be a long-term watch, just to see how they shake and bake after the debt levels possibly come down further, and to see if they start looking at the dividend policy a little bit.
Yeah, I think that's fair. I'm not going to keep them really on my watch list right now. I'm looking at other opportunities. There are plenty of other great stocks, but you own Reynolds in your family's portfolio, so it's easy to understand why you'd want to keep watching, to keep monitoring and seeing if it's time to add. I get it.
Guys, let us know what you think of Reynolds stock here. I know another random stock that we brought to you guys. Try not to rinse and repeat a lot of the same names that you see across the YouTube channels right now, but trying to give you guys another opportunity to buy a dividend stock in this wild stock market of 2023. Again, let us know what you guys think in the comments.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And Lanny, what do we need to tell these people?
Oh, real easy, real simple. You guys are either with us or you're against us. Jack, that was Bert the Hurt and Lanny from the DD over and out.